Good evening, friends. I welcome all of you to this intensive study group on the topic Taxation Law Second Amendment Act 2016 and the demonetization of currencies. And today we have Jagdish Punjabi ji, who will enlighten us on this subject. You know, friends, we all know that nowadays the buzzword demonetization has created a lot of anxieties and the lot of issues. It has its own issues, and we are always like government is also coming out with the everyday some new amendments. Sometimes Reserve Bank comes with some amendments. Sometimes Finance Ministry comes out with the amendments, and sometimes the CBDT today CBDT has issued some even the FAQs. So that way, so many things are there, and it becomes very important for all of us to understand the various issues arising from this, from this. And we have the speakers Jagdish Punjabi, who will enlighten us on the subject, and I welcome Jagdish ji on this, and I request him to start with the proceedings. Yeah. Yeah, now our chairman of this committee, Ketan Vajani, will briefly introduce the speaker.
Good evening, everyone, and welcome to this intensive study group meeting on the hot topic of the day, which is demonetization of currency and taxation effect of the same. In fact, normally, in the ISG meeting, we do the decisions, we discuss the decisions of income tax under various important decisions. But considering the fact that the whole country is in indecisive mind as of now, including RBI and the Finance Ministry, we thought that rather than talking about the decisions, it would be worth if we can go through this which are very important, and we can understand the minute issues which comes out of this amendment. So many issues are there that probably we will not be able to do justice to everything. But I'm sure that with Jagdish Bhai with us, we'll be able to handle the questions also very well. This meeting, since it is we are also welcoming the members who are joining live as a live webinar. We have got members from various cities all across the country, and we are really happy that they are able to get the benefit of this wisdom of Jagdish Bhai. With this few things, normally in our ISG we do is that we have it as an interactive session, but considering that now we are going to have this amendment, etc., we'll discuss in a webinar format. So what I request all of you is that you please reserve your questions for the time being, and last 15 minutes we have reserved for the question answer. That time definitely we will take all the questions whichever is possible. The members who have logged in from distance, who are joining as a webinar attendees, I request them to have whatever questions they have. You are please requested to keep on typing and dropping it in the chat box. Towards the end, we will hand over all the questions to our speaker, and we will be able to deal with each of them. With that small backdrop, let me have the pleasant task of introducing our speaker for the day, Shri Jagdish Bhai. Jagdish Punjabi is a practicing chartered accountant since 1989. His area of specialization is direct tax, and he was head of the Department of Accountancy in Entrance College, and also in Ghanshyam Das Saraf College for last 17 years. He was a faculty member for RRC of BCAS, which was jointly with WRC of students, and also for our chambers RRC. He has also contributed, regular contributor to the journal, BCA journal, in the section of tribunal news. A very learned person. He has secured rank in the CA inter-examination and a member of various committees of our chamber, including our direct tax committee, L&R committee, Allied Laws committee, study circle, study group committee, etc. He is a member of the journal committee and also convener of the taxation committee of Bombay Chartered Accountants Society, and a very educated person, at the same time a very humble person. Whenever we request him, he is always available with us. Sir, thank you very much again for accepting our invitation and talking on this very important subject. When we discussed about this meeting, nothing was there. It was in fact a bill stage, or probably even earlier to that we have confirmed with him. And now we are having a taxation law second amendment act, in fact. So much of clarity has already arrived, and many are still expected to come in the times to come. Many issues are still there, including the question like how much I can deposit safely in my bank without getting the eyebrows of the department raised. So many questions. But then yes, let us understand the concept first, and then towards end we'll have around 15 minutes of question answer session. We'll be able to have the best wisdom out of Sri Jagdish Punjabi's knowledge. With that, friends, I again welcome Sri Jagdish Bhai to our meeting. I'll request our President Hitesh Bhai. Yeah, this is one more good feature about this is that this is a webinar which we have planned. This ISG meeting is the first meeting on the direct tax front. Of course, the chamber has done it on the indirect taxes. A few of the webinars have already been done, but this is the first time that on the direct tax front we are doing something like a webinar for which the members from the distant place are also able to log in. And I am informed that we are having members from quite distant places like Malegaon, Bilaspur, Noida, Rajkot, Delhi. So this is the benefit of the technology, and the chamber is the first one to always use the technology in the right direction. So let us hope for the best, and let us have the benefit of wisdom of Sri Jagdish Bhai. But before I request Jagdish sir to take, I would request our President Hitesh Bhai to please offer a memento to Jagdish Bhai as a mark of our love and respect. Right, sir.
कम रखा था साइलेंट नहीं किया
I request Jagdish sir to present.
क्या बात सुबह से नहीं खाया सुबह से नहीं खाया सर साइन चाहिए सर्टिफिकेट कोर्स कुछ हुआ था ना उन्होंने बोला कि यही पेन से ही लेना पता नहीं रेड मार्क मैम रेड मार्क कर
Good evening. As explained by the President and also by Ketan, is the tax consequences arising as a result of the government's act of demonetization. In fact, to address the tax consequences, a special act has been enacted, namely the Taxation Laws Second Amendment Act of 2016.
बैटरी चला जाएगा ना
चार्जिंग लगा
किधर है चालू किया
हाँ वो
इधर इधर ना
मेरे को क्या बेसिक नहीं कर रहे
मैं कर रहा हूं क्या नहीं मैं कर हां
सर यहाँ से पहुँच के क्यों बोल यहाँ से
तिकडे आवाज जातो
Hello. Sorry for the interruption. Now the presentation for the day is dealing with the provisions of the Taxation Laws Second Amendment Act of 2016. For the sake of brevity, we will address it as an amendment act. We are going to discuss the provisions as they are. Broadly speaking, the purpose of the Amendment Act was to tighten the regime for taxation of cash credits, unexplained money, unexplained investments, unexplained expenditure. So basically, the taxation of incomes referred to in section 68, 69, 69A, 69B, C, and D, that is 6 sections, is the lacuna over there. I mean, what was considered by the government as a possible lacuna in the existing provisions has been sought to be tightened by the revenue. The substantive law dealing with the provisions of these 6 sections, to which I'll say as specified sections, is unchanged. The Amendment Act has 3 chapters and 5 clauses, so it's a brief act in that sense. It has come into effect on the President of India giving his assent on 16th of December 2016. Basically, what does the Act try to do? The Act is basically trying to change or modify the provisions of section 115BBE and also the provisions of penalty sections 271 AAB and AAC. This is one set of amendments. The second is that the chapter known as Chapter 9A to the Finance Act of 2016, which chapter is captioned as Taxation and Investment Regime for Pradhan Mantri Garib Kalyan Yojana, has been introduced. The idea is to give an opportunity to people to come out clean by declaring their undisclosed income under the Prime Minister's Garib Kalyan Yojana. Now, which are the sections where government thought there was a lacuna in the present law? These sections are 68 to 69D, as I have earlier mentioned. What do these sections deal with? 68 deals with cash credits, 69 deals with unexplained investments, 69A deals with unexplained money, etc. 69B deals with amount of investments which are not fully disclosed in the books of account. 69C deals with unexplained expenditure, and 69D deals with amounts borrowed on hundi. Now, apart from this Second Amendment Act, 4 notifications have been issued. First notification decides the commencement date of the Yojana as well as the closure date of the Yojana. Rules have been framed known as Taxation and Investment Regime for Pradhan Mantri Garib Kalyan Yojana rules. A scheme known as Pradhan Mantri Garib Kalyan Deposit Scheme has been notified, and we have been told who is the principal commissioner or the commissioner to whom we have to make a declaration. What I propose to do is deal with the provisions of 115BBE first, then come to 271 AAB, 271 AAC, and then lastly we'll come to the Yojana. Now, what does 115BBE say? 115BBE, as it was prior to its amendment by the Amendment Act, provided for a rate of taxation. Rate of taxation for income referred to in 68 to 69D. It said that if your total income included income referred to in these 6 sections, then the tax on such income shall be chargeable at the rate of 30% plus the applicable surcharge. The applicable surcharge depended on my legal status, whether I was an individual or I was a company. It also depended on what was my total income. Say, for example, if I am an individual having total income of less than 10 crore, then I am not liable to surcharge, going by the provisions of the Finance Act 16 to the extent they are applicable to AY 17, 18. In case I am a domestic company, then up to 1 crore with a total income up to 1 crore, I am not required to pay any surcharge. But if my income is between 1 crore and 10 crore, I am required to pay surcharge at the rate of 7%. If I am a domestic company with a total income more than 10 crores, then I am required to pay a surcharge of 12%. Of course, cess everybody is required to pay at the rate of 3%. Therefore, tax incidence, if my total income, included income from these 6 specified sections, was anywhere between 30.9% to 34.608%. Consequent to demonetization, views were expressed that whatever undisclosed cash I have and which I am depositing in my bank account can be offered by me in my return of income as unexplained money, and I would pay tax at the rate mentioned in 115BBE, which was either 30.9 to 34.608%. Since I would be offering this amount in my return of income, there was no concealment. There would be no difference between the assessed income and the return income. Therefore, there would be no penalty leviable under Section 270 capital A, as was applicable for AY 1780. It's a different issue that there could have been a question as to whether an assessee on his own can offer income of the nature 68 to 69D. Because if one runs through each of these sections, it is the language is where assessee is found to be the owner of. Now, found to be owner of does not mean that the assessee himself says. Somebody else comes to a finding. That was also a view. However, the preponderant view was that the assessee can offer such income in his return of income, paid tax at 30% plus the applicable surcharge, etc., and says, and be done with it. Of course, such a view was never intended by the government. Government never envisaged that this is what could be the consequence of the provision of the Act. Therefore, what does the government do? Government has, with effect from assessment year 17-18, changed the provisions of 115BBE. Now, what does this say now? The rate of tax, which was 30% for the income of referred to in the specified section, has been changed from 30% to 60%. In addition, the assessee is also required to pay surcharge, which is 25% of the tax payable, which is 15% of your income, and assess. Therefore, all in all, income referred to in the specified sections, if it is offered for taxation by the assessee in his return of income, now will attract tax at the rate of 77.25%. So if at all somebody were to go and deposit demonetized notes and come up with the argument that this is my unexplained money which I am offering it for tax under section 69A, he would be required to pay tax at the rate of 77.25%. If somebody is willing to do it, it's fine. Now, when is this amendment effective? This amendment is effective from assessment year 17-18. Therefore, henceforth, for all times to come, the rate which was 34% has now become 77.25%. One may look at it as an amnesty scheme on the tap with 77.25% rate of taxation. Whenever you feel that you have undisclosed income, which is referred to in one of these 6 sections, you can offer it for taxation by paying this tax. Now, the Act has been effective from 16th of December. But this section will apply for assessment year 17-18. Therefore, even if cash credit in respect of a period from 1st of April to 8th of November is found in my books of accounts, then also I will suffer this rate of taxation. If at all there was a search in my premises from 1st April till this date, and in the course of that search, unexplained investments, etc. were found, normally those would have attracted tax at 30% plus the applicable surcharge. Now we are going to pay an all-inclusive rate of 77.25%. The scope of this amendment is not restricted only to demonetized notes. It is even in respect of unexplained investments, which are undisclosed assets which you have, cash credits which you may be carrying in your books of accounts. The section will apply to all assessees, irrespective of their legal status, irrespective of their residential status, PMLA, etc. No restrictions. It will apply even to those who are covered by presumptive taxation. So if an assessee is offering his income on a presumptive taxation basis and is found to be an owner of an investment which is not recorded in his books of account, 115BBE will affect him as well. It is applicable irrespective of the quantum. So even if you have 10,000 rupees of cash credit in your books, or you have unexplained money of 15,000 rupees or 10,000, whatever that amount be, you are still liable to pay tax at the rate of 77.25%. Not only that, we will see that in addition to this tax, we are even told that when you are computing your total income and you are offering for tax income of the nature referred to in these 6 sections, then you are not entitled to claim any deduction in respect of any expenditure or allowance or set off of any loss under any provision of this Act. Now, please mark that you are not entitled to claim any deduction in respect of any expenditure or allowance or even set off of any loss. Now, prior to this amendment by the Second Amendment Act, I was entitled to claim a set off of loss. That claim of set off of loss has also been debarred. But there appears to be some lacuna. The lacuna is that when you come to 115BBE, it says it has subsection 1 which provides for the rate of tax applicable to income of the nature covered in these 6 sections. It has two clauses, clause A and clause B. Clause A applies to cases where the assessee offers income of this nature in his return of income. Clause B covers cases where the assessee does not offer income of the nature covered by this section, but the AO detects it, and he is finally assesses the assessee to tax under one of these 6 sections. The rate of tax is the same for both categories, whether you offer it or the AO detects it. Now a question may arise, then why this distinction? If the rate is same, the surcharge is same, why are you making a distinction between clause A and clause B? There are 2 reasons. Number 1, when you come to penalty, if you have offered it for taxation, there is no penalty under 271 AC. Of course, if you have paid your tax before the end of the previous year. But if the AO detects the income of the nature referred to in these 6 sections and he assesses it, while the rate of tax would be the same because the rate is same for clause A or clause B, you will, in addition to tax, be also liable to pay penalty under 271 AC. Also, the subsection 2, rightly or wrongly, does not apply to income of the nature referred to in clause B. Therefore, if the AO detects income of this nature, then I can possibly claim deduction in respect of expenditure, allowance or set off of loss. This appears to be an unintended lapse. I will not be surprised if the Finance Act of 2017 amends this, and it is not going to be a retrospective amendment because it will still be an amendment for AY 1718. Now, it is where the restriction is on deduction for expenditure, allowance or set off of loss. There is a debate as to whether I can claim deduction under Chapter 6A or not. I would believe it appears to be possible to claim a deduction. Now, I made a reference to clause A and clause B. Right? Now, clause A applies where I have offered the income in a return under section 139. Now, please note, if I offer income under these 6 sections, not in a return under 139, but in a return under 148, then I would not be covered by clause A, I would be covered by clause B. As I explained earlier, the distinction between clause A and clause B is that in cases covered by clause B, I would attract a penalty. Okay. Now, now when we come to return of the mentioned in 139.1, which are the returns mentioned in 139.1? One is the return which is filed on or before due date, which is 139.1. Second could be a belated return under 139.4, and third could be a revised return under 139.5. Now, for a return to qualify as a return under 139.5, discovery of omission or a wrong statement is a prerequisite. If I do not discover any omission or a wrong statement in my return filed, it will not qualify to be a revised return. This controversy will assume importance now. Question arises as to what happens if I file a return in response to a notice under 153A or 153C. Will it qualify? And in that return, I offer this income for taxation under the one of these 6 sections. Will it qualify under clause A, or will it be said that no, I have not declared it? If one goes to 153A, it says that a return furnished under 153A is regarded as a return filed under 139 of the Act. Therefore, though it is a return in response to a notice under 153A, I would believe that it will qualify as a return filed under section 139 of the Act. Now, will I be liable to pay interest under section 234C of the Act? If I am suo moto offering this amount for taxation in my return of income today, am I going to be liable to pay interest under 234C? Undoubtedly, it appears yes. Will I be liable to pay interest under 234A if I file a belated return? The answer would be yes. What if my advance tax paid is more than 90% but less than 100%? 234B in such a situation may not be payable, but the downside will be I will not be able to claim immunity from penalty. If 100% of the tax is not paid on or before the end of the previous year, I am liable to pay a penalty. The immunity from penalty comes only if I have paid tax entirely on before the end of the previous year. About the amendments made by the Amendment Act to the provisions of 115BBE. Okay, the questions we come to the end. So after all the sections, okay. We now come to the provisions of penalty under section 271AA(b). Now, what does 271AA(b) penalty say? Forget the amendment. For a moment, let's understand what were the provisions. The provisions of 271AA(b) apply to cases where undisclosed income has been assessed in respect of a specified previous year in such cases. Therefore, 271AA(b) applies only to such cases. It does not apply to non-such cases. It will not apply to a survey case. It applies not for all the years for which you filed a return under 153A, but it would apply only for a specified previous year. It would not apply for all the income, but it would apply only for undisclosed income. The term specified date, specified previous year, and undisclosed income are defined in an explanation to section 271AA(b). Now, 271AA(b) has three clauses or three situations where different rates of penalty are prescribed. First is covered by clause A, where the penalty is at the rate of 10% of undisclosed income. Second is clause B of subsection 1, where the penalty is 20% of undisclosed income. And third is clause C of subsection 1, where the penalty is varying. The AO has a discretion to levy a penalty from 30% to 90% of the undisclosed income. So your penalties are 10%, 20% or 30%. Now, when do I qualify for a least penalty? I will qualify for least penalty of 10% if I admit, the assessee admits undisclosed income in a statement under section 132(4). And he specifies the manner in which he derived such income. Not only specifies the manner, but also substantiates the manner in which he derived the income. And on or before the specified date, the assessee pays tax together with interest in respect of undisclosed income, furnishes the return of income for the specified previous year, declaring the income. Therefore, you have a case of a person who, when he searches, admits that yes, this is my undisclosed income. And he admits it in a statement under 132(4). He specifies the manner, he substantiates the manner, he offers that income in the return of income, he pays tax along with interest in respect of undisclosed income. Second category, where the penalty is not 10% but 20%. What is the difference between the first person and the second person? The second person does not admit it in a statement under 132(4). He does not specify the manner, he does not substantiate the manner, but he offers that income, undisclosed income, in his return of income, pays tax together with interest. So his worse off is a different type as compared to the earlier. Therefore, he is being told that you will be penalized greater, and the penalty in his case is 20% of the undisclosed income. Now, anybody who is not covered by the first two categories is covered by the third category, and the penalty in third category is 30% to 90%. Right? Now, who would be covered by the third category? Let's try to understand. Somebody who has not declared undisclosed income in the return of income. Because if he would have declared it, he would have come in the second category. So the person who does not declare it, a person who has declared the undisclosed income but has filed the return of income after the specified date. Because in first two categories, the return was to be filed by a specified date. Now, so if you have a person who declares the income undisclosed income in the return, but does not file the return by the specified date, or he declares the undisclosed income in the return, files the return by specified date, but does not pay tax along with interest before the specified date. These are the cases where a person would qualify, would be liable to pay penalty ranging from 30% of undisclosed income to 90%. Now, wherever 271 AA applies, 270 capital A or 271 does not apply. The provisions of 274 and 275 are applicable. Now, we made a reference to specified previous year. Now, what is specified previous year? It could be either 1 year or it could be 2 years, depending on the facts of the case. Let's understand with an illustration. Supposing a search was to be conducted on an SSC on 30th August 2016. Right? Now, on 30th August 2016, if the search has been initiated, what is the specified previous year for this person? The specified previous year for this person will be 2 previous years. Number 1, the previous year in which search was conducted. Therefore, previous year 16, 17. Second would be the previous year which has ended before the search was initiated, but the due date of filing return has not yet come, and he has not filed a return of income. Supposing the due date has not come, I can always file a return in advance. I need not wait till the last day of the due date. So if this person who is searched on 30th of August has filed a return on 25th of August, then financial year 15-16 or previous year 15-16 is not specified previous year for him. But supposing he has not filed it, then what would happen? Then financial year 15-16 is also a specified year, previous year. Financial year 16-17 is also a specified previous year. For these 2 previous years, if at all there is any undisclosed income assessed, it will be liable for penalty under section 271 AA(b). Now, if the search is conducted on say 30th October 2016, my due date was 30th September, then my specified previous year will be only previous year 16-17. Right? Why this is important? Because if I am dealing with a year which is not a specified previous year, then penalty under 271 AA(b) cannot be levied, period. Now, undisclosed income has been defined. It's there on the slide. One can refer it later at his convenience. Now, for levying penalty under 271 AA(b), the undisclosed income may or may not be of the nature mentioned in the specified sections. Specified sections are the 6 sections to which we are making a reference. Also, if the income was not declared, but the same is not undisclosed income as defined in explanation C, then the penalty will not apply. So, if there is an addition which addition does not qualify to be undisclosed income as defined in explanation C to this section, then qua such an addition, penalty under 271 AA(b) does not arise. Now, if you get into the background, the purpose of 271 AA(b) was to levy penalty at a lower rate. Why at a lower rate? Because what are we dealing with? We are dealing with a case where the previous year has not ended. Search has happened, but the previous year has not ended. So you cannot presume that I would not have declared this in my return. Or the previous year has ended. The due date has not gone for filing the return. I have not yet filed my return of income. Those are the cases where we are dealing with, 270. So the objective was that the penalty rate should be lower. However, as a result of this Amendment Act, things have changed. Now, what does this Amendment Act do? Amendment Act introduces one new subsection there, which is subsection 1 capital A. Subsection 1 remains as it is, but it will now apply only for searches conducted or searches rather initiated on or after 1st July 2012, but before the date on which Amendment Act receives the assent of the President. That is 16th of December. Therefore, whatever we discussed in the last couple of minutes will apply in respect of searches initiated from 1st July up to 15th of December. For searches initiated on or subsection 1 will continue to apply for earlier searches. For searches on or after 16th of December, subsection 1 capital A will apply. Now that we have understood what subsection 1 was, we will just look at the differences between subsection 1 and subsection 1A. Now, what was situation number 1 in subsection 1, which qualified for a 10% penalty? Continues in subsection 1A, but now qualifies for penalty not at 10% but at 20%. What qualified for penalty under situation 2, which was 20%, and also in situation 3, which was 30% to 90%, has been grouped together. So now instead of 2 categories, you have only 1 more category, right? So 3 categories earlier, now you have 2 categories. The second category, discretion has been taken away of the AO. Now it qualifies for a straight penalty of 60% of undisclosed income. For searches initiated on or after 16th of December 2016, the penalty under 271 AAB will be either at 20% or at 20% of undisclosed income or at 60% of undisclosed income. Now, mind you, all this is tightening of the regime. Nothing to do with demonetization. Nothing to do with your, specified sections. The apprehension was that people are going to disclose sections. Now, this is a provision which deals not only with income under specified section, but except in respect of now income which has been detected in a search after 16th December. Let us understand what is going to be the consequence. The tax effect would be as high as 97.25% or 137.25% if the addition of undisclosed income is on account of specified sections. If the addition is, because what happens in a search? Some cash is found, or some assets are found, or it is found that you have made an investment which is not fully recorded in the books. Basically, therefore, as a result of search, all the additions generally are under specified sections. Now, if such an addition were to happen in respect of searches conducted on or after, initiated rather, not conducted, on or after 16th of December, the person or the search would be liable to penalty ranging from 97.25% or 130% consequence. The definitions remain unchanged. Further, please note that if the addition is on account of specified sections, in addition to penalty under 271 AAB, you may be liable to a penalty under 271 AAC as well. So one will have to now really be very, very careful that if your search, the impact is going to be really very high. The compliance needs to be much smaller. One needs to be more careful while declaring the incomes in the returns. Now we come to next penalty, which has been newly introduced and is applicable with effect from assessment year 17-18 which is penalty under section 271 AA-C. This new section has been introduced. Penalty is leviable under 271 AA-C if the following conditions are satisfied. The total income determined includes any income referred to in the specified sections. Repeat, specified sections means one of those 6 sections from 68 to 69D. And the income referred to in the specific sections cannot include in the term income for instance, or tax on income referred to in the specified sections has not been paid on or before the end of the relevant previous year. So, if you pay tax and your total income includes income of the nature referred to in these 6 sections, and you have in your return not included income under these 6 sections, or you may have included it in the return under 139, but you have not paid the entire tax on or before the end of the previous year, you will be liable to pay a penalty under this section. And this penalty will be in addition to the tax mentioned in 115 BBE, which we saw was as high as 77.25%. The quantum of penalty will be 10% of the tax payable under clause 1 of subsection 1. Questions have arisen as to whether the tax would include surcharge or surcharge is not to be included. In other words, whether the penalty is 10% of 60% or the penalty is 10% of 75%. The question arises because Supreme Court has held that tax includes surcharge. However, if one looks at the language of this section, it says the assessee shall pay by way of penalty in addition to tax payable under section 115 BBE a sum computed at the rate of 10% of tax payable under clause 1 of subsection 1 of 115 BBE. Therefore, the language is very, very clear. It says 10% of the tax payable under 115 BBE subsection 1 clause 1. Now, subsection 1 clause 1 of 115 BBE talks of only 60%. Therefore, the question is here is ill-founded. It is undoubtedly 10% of 60%, which is 6%. Now, this section also provides that the provisions of this section are notwithstanding anything contained in the Act other than 271 AA-B. In other words, the penalty could be in addition to 271 AA-B. The penalty shall not be imposed. Penalty under 270 capital A shall not be imposed on the assessee in respect of income referred to in subsection 1, which is the income of the nature mentioned in the specified sections, which are the 6 sections beginning from 68 to 69D. We are told that the provisions of 274 and 275 are applicable to penalty under this section. Therefore, one will say that levy of penalty is not mandatory but is discretionary because an opportunity is to be given to the assessee. Now, a question arises, is the levy of penalty under this section appealable or is it not appealable? The answer would be it is appealable to the commissioner. One says a query came that there is no consequential amendment in 246 capital A. So how do you say that it is appealable? It is appealable because this is still a penalty under chapter 21, and under 246A subsection 1 clause Q, an order imposing a penalty under chapter 21 is appealable to the commissioner. And when we come to the provisions dealing with under 253, which deal with appeal to the tribunal, we are told that any order passed by the Commissioner of Appeals under section 250 is an appealable order. So when a commissioner passes an order under 250, it's against this appeal, it will be an order under 250 and it is appealable under 253. Now in such cases, as we saw, 271 AAB will apply for specified previous year, and 271 AAC will apply for those specified years as well as for other years. Now what will happen is that in a search assessment, you will have assessment of 7 years normally done. I mean 6 previous years plus the current year is also taken up together. I mean it's of course an assessment under 143.3. It is not an assessment under 153A or C, but 7 years assessment is taken up together. Now if at all income of the nature mentioned in these specified sections is assessed in all the 7 years, then for the specified previous years, which could be either 1 or 2, you will have penalty AAB plus 271 AAC, whereas for the other years, you would have penalty under 271 1C, or going forward 2 or 3 years later, you will have 270 capital A plus 271 AAC. Therefore, you will always have 2 sections operating for penalty in respect of addition to total income for the income referred to in the specified sections. Now, this was all about the amendment made by the Amendment Act to the provisions of 115BBE, 271 AAB, and 271 AAC. We now come to object and Kalyan Yojana. The statement of objects and reasons appended to the Taxation Laws Amendment Bill 2016 mentions the objects. It is relevant because many questions are going to come as to what qualifies and what does not qualify under this scheme. Let's look at the objects. The first para explains that evasion of taxes is depriving the nation of its critical disproportionate burden on the honest taxpayers who have to bear the brunt of the revenue leakage to make up for this. Para 1 describes why demonetization. Explains that there is a possibility of misuse of the existing provisions to conceal black money. Therefore, what? Therefore, we are making the changes. The changes referred to are changes in 115BBE, 271 capital A, AAC. 271 AAB does not seem to be the reason for this. Then para 3 says that in the wake of declaring specified banknotes as legal tender, there have been representations and suggestions from experts that if you do not allow people to come clean, what will happen is black money will get converted into black again. They say we do not want that. Therefore what? Therefore provide an opportunity to pay taxes with heavy penalty and allow them to come clean, so that government gets additional revenue for the welfare of the poor, and also the declared income will legitimately form part of the formal economy. Very well. Thus, money coming from additional revenue as a result of decision to ban 1,000 and 500 rupee notes can be utilized for welfare schemes of the poor. Now, please note, money coming from additional revenue as a result of decision to ban 1,000 and 500 rupee notes. This is going to be important when we come to issues subsequently. Therefore, what? Therefore, para says that as an alternative scheme, the taxation and investment regime for Pradhan Mantri Garib Kalyan Yojana is proposed to be provided in this bill. The declarant will be required to pay tax at 30% of the undisclosed income, and penalty at 10% of the undisclosed income. Further, a surcharge to be called Pradhan Mantri Garib Kalyan Yojana, to be called as Pradhan Mantri Garib Kalyan cess at the rate of 33% of the tax is also proposed to be levied. Therefore, and not only that, they want that the declarant shall deposit 25% of the undisclosed income in a deposit scheme to be notified by the central government in consultation with RBI, to be known as Pradhan Mantri Garib Kalyan Deposit Scheme. The scheme has since been notified on 16th of December. It is operative from the amount, this amount, which amount? The deposit amount, is proposed to be utilized for programs of irrigation, housing, toilets, infrastructure, education, health, livelihood, etc., so that there is justice and equality. Now, with this in mind, Section 5B of the Amendment Act has introduced a new chapter in Finance Act 2016. So, your Yojana, Pradhan Mantri Garib Kalyan Yojana, is a chapter not in the Income Tax Act, but is a chapter in the Finance Act of 2016. This chapter 9A has sections from 199 capital A to 199 R. It contains basically the scheme, as we saw, taxation, titled Taxation and Investment Regime for Pradhan Mantri Garib Kalyan Yojana. The scheme does not mention the commencement date and the closure date, but mentions that the dates will be notified. The dates have since been notified to be 17th December and 31st of March. So scheme commences on 17th of December 2016 and is open till 31st of March 2017. Deposit scheme has also been notified, as I mentioned. Now, what is the purpose of this? The purpose of the Yojana is to enable a person to declare undisclosed income held. An account maintained by a person who will be a declarant with a specified entity. The term specified entity has been defined in an explanation to 199C. Now, let's look at who can make a declaration and when can he make a declaration. First is who can make a declaration and when can he make a declaration. It says any person may make a declaration. 199C says any person may make a declaration of what? Of any income. The declaration has to be by any person. Declaration has to be of what? It says any income. Surprisingly, it should have been any undisclosed income. I mean, as to any income in the form of cash or deposit. So that income which I am declaring here has to be in the form of cash or deposit. Deposit where? Deposit in an account maintained by me, by the person, with a specified entity. A declaration is subject to the provisions of the scheme, obviously. I mean, this is a charging section. Now, the word used is any person. Therefore, question is, what is the meaning of any? Dictionaries tell us that any is a word which excludes any limitation or qualification. Therefore, give it as wide a meaning as is possible unless it is restricted by the subject matter or the context. Now, in the present context, where do we find restrictions? We will find restrictions in section 199 capital O. 199O of the Finance Act provides that the scheme shall not apply to certain persons specified in clauses A to C. The term person, any person here, therefore will exclude persons who are covered by 199O. I cannot say that in the charging section you have mentioned that any person, therefore I am also qualified as it, even though I am covered by 199O. No, because 199C is subject to the provisions of the scheme. Residential status or legal status of the person is not a bar for making a declaration. So a non-resident can also declare under the scheme, a resident can also declare. The term person, now whatever words are used in this scheme but are not defined here, but are defined in the Income Tax Act, the meaning as given in the Income Tax Act needs to be borrowed. Now, the word person we know has been defined in section 2, subsection 31 of the Act. Now, a declarant could be any of the entities mentioned in 231, namely individual, HUF, firm, AOP, BOI, local authority, etc. Now, the declarant has to be a person on the date of filing a declaration. Now, why am I making this point? The point I'm making is that supposing a firm has since been converted into an LLP. So as of today, the firm does not exist. There is only an LLP. Can the declaration be made by the erstwhile firm which is no longer in existence today? The question arises, firm what was earned by the firm, right? So today, who will make that declaration? Should the LLP make a declaration, or is it the firm which should make a declaration? It is income which was earned then by the firm, which the firm did not declare it in its returns. The firm since got converted into an LLP. Today there is LLP, there is no partnership firm. Who should make a declaration, right? One. Second example could be an amalgamating company, right? Or third example could be conversion of a company into an LLP. Now, for all these, one may make a reference to a circular of CBDT dated 27th June in the context of IDS, where they said that in such cases, who has to make a declaration? They say the person who is there today should make a declaration. It should be in respect of that income should be for which year should I offer it? They said you offer it as income of the assessment year where it got converted, where the status changed, right? I would believe that for these situations, the analogy will apply to the Yojana as well, right? That is, for these cases, it would apply. However, one cannot say as a general rule that a person who is not in existence today, his declaration cannot be made. To illustrate, supposing somebody has expired and there are legal heirs. Legal heirs are in possession of cash, which they believe that the deceased person had not declared it in his returns, right? Can they or can they not make a declaration? The answer would be yes. The declaration would be made by the legal heirs of so and so, right? Now, this would be in respect of income for the period when the deceased was since alive. The other example could be a company in liquidation. You could have examples of a partitioned HUF or a private trust, etc. Now, when do I make a declaration? I already mentioned that a declaration can be made anytime between 17th December to 31st of March. Now, we said that declaration can be made by any person other than persons mentioned in 199(o). Right? Now, what does 199(o) disqualify people from? The people who are disqualified are people or persons in respect of whom an order of detention has been made under COFE POSA, or a person who has been notified under Section 3 of Special Court Trial of Offences Act 1992, or a person who is liable to be prosecuted for any offence punishable under Chapter 9 or Chapter 17 of IPC, the Narcotic Drugs and Psychotropic Substances Act, Unlawful Acts, Unlawful Activities Prevention Act, Prevention of Corruption Act, Prohibition of Benami Property Transactions Act, PMLA, and also in relation to undisclosed foreign income and asset, which is chargeable under black money, undisclosed foreign income and assets Imposition of Tax Act 2017. Now, except for these people, everybody else can make a declaration. Everybody else qualifies for making a declaration in respect of undisclosed income. Now, relevant is a declaration can be made in respect of any income in the form of cash or deposit in an account maintained by a person with specified entity chargeable to tax for any assessment year commencing on or before 1/4/17. Therefore, it has to be chargeable to tax under Income Tax Act. Now, your Act came into force from 62/63. While you're declaring, you will not be entitled to claim any deduction in respect of any expenditure or allowance or set-off of loss against the income for which you are making a declaration. Now, we saw that the 199C says that declaration can be in respect of any income. Now, we said any income would mean undisclosed income. Where do I get support within the scheme from? Within the scheme, I get support from 199D1, which says, notwithstanding anything contained in the Income Tax Act or in the Finance Act, the undisclosed income declared under subsection 1 of 199C. Therefore, what is referred to, though, as any income in 199C is actually an undisclosed income. Also, if you look at the caption of 199C, it makes a reference to undisclosed income. Now, what am I supposed to declare? I'm supposed to declare undisclosed income. Now, what is undisclosed income? That is not defined. The term undisclosed income itself is not defined in the scheme. I'm told what is not defined in the scheme, but is defined in the Act, borrow the definition from the Act. When I go to the Act, in section 2 at least, the definition of undisclosed income does not appear. There are definition of undisclosed income as we saw in 271 AB, but that is the definition for the purpose of that section. I cannot borrow that definition and apply it to the Yojana. Now, therefore what? Therefore, what will qualify? I would feel that anything which satisfies the following criteria will qualify. One, it should be chargeable under the Income Tax Act. And it should be chargeable for any assessment year commencing on or before 1/4/17. So income of AY 17/18 will not qualify. On or before, so 17/18 will also qualify. Excuse me. It should be undisclosed. Therefore, it should not be disclosed in the income tax return. Question arises, can I offer or am I required to offer exempt income over here? The answer is obviously not. Because the exempt income is not chargeable to tax under the Act. That income should be held by the declarant in the form of cash or deposit with the RBI, bank, post office. It should not represent money earned through the activities mentioned in 199O. That means it should not be crime money or money laundering. I am not required to disclose the source of cash or deposit. Cash which I have may or may not be in demonetized note. I could be having new currency. I can go and deposit that and still make a declaration. The scheme nowhere says that you must deposit demonetized notes. I may be having old notes which are not demonetized, a smaller currency. I may be having notes of 500 or 1000. I may have made a deposit in an account 5 years earlier. That deposit is lying there, but that was out of income which was not offered for taxation. So that account was not reflected to the tax authorities. Can I now offer that deposit under the scheme? The answer would be yes. Question arises that when you say undisclosed income held in the form of cash or deposit in an account with a are we referring to income which today on the cash? Are we saying that when it was earned, it was in the form cash or a deposit. Consider a situation, income in a bank account, but he went and he purchased gold with that, or he went and purchased a house with that and paid on money in cash. Can such a person declare that under the scheme, pay 49.9% and also deposit? Or will one say that no, this does not apply? Assuming the answer is that yes, I can declare that also. Then the next question comes, do I declare that at today's market value, which was the rule as per IDS, however, this scheme nowhere talks of market value, therefore, do I declare that asset or the on money which I paid for acquiring that asset at cost price? If you tell me that I should declare it at cost price, then what we are saying is that we are under an era where we are better off than what people who declared under IDS 2016 were, because they declared at market value as on 1st of June, whereas we are now. This is where the object comes into play. Here we have an issue with the language. Therefore, how do we resolve it? One possible way would be look at the objects. When we went to the objects, what did we see? Item number 3 told us that whatever has happened as a result of demonetization, to them I want to give an opportunity, so that the government should also get taxes, money should come in the mainstream, otherwise black will remain black, right? So if somebody had income in the form of demonetized notes, which was undeclared income, this is giving an opportunity to them. Question arises that if a person earned income and invested it in a form other than cash or deposit with the specified entity, he is worse off. Or alternatively, a person earned, he spent it. Between two SSEs over here, somebody who has, now see, both have undisclosed income, but one had applied it in a different form, the other has preserved that income in a different form. What we are saying is that somebody who preserved that undeclared income, undisclosed income in the form of cash or deposit with a specified entity in an account with a specified entity is covered by the scheme. The other person is still left out. He's still left out. Therefore, if he wants to come in, where does he come in? He probably comes under 115BBE by paying a differential rate. Now here you have 49.9% plus blocking of 25% of the amount for a period of 4 years. There you have 77.25%, assuming you are voluntarily declared. Also, here this declaration, as we come to it later, cannot be used as an evidence against the declarant. Whereas if you come under 115BBE, possibly that statement can be used against you. Say for example, I choose that I don't want to come under the Yojana, but still I want to come clean, right? I feel that yes, compliance is becoming difficult here. Therefore, one must come clean. Therefore, I choose to offer income. Now, where will I offer it? I cannot obviously offer it as current year's income. So I will have to offer it in one of the sections from 68 to 69D. If I choose to offer, and I say, yes, when I purchased property, I paid on money. Or when I acquired gold, which I had not disclosed it, now I am disclosing it. This is my unexplained asset. I am offering it for tax, I am paying 77.25%. Will some other department not use that against me? The answer is yes. To illustrate, if you were to pick up the on money paid for property transaction, if at all it is there, then the stamp authority may possibly say that you have yourself admitted in the return that you have paid, therefore to that extent the stamp duty was underpaid. The statement which you made in the agreement which has since been registered was an incorrect statement. Therefore, I am levying stamp Yes, in the past, I did sell goods in cash. I did not record them. Can I now declare it? Possibly no, till such time as that NBFC is notified by virtue of the power vested. Now, how much tax do I pay once I decide to get covered by the Yojana? In respect of undisclosed income which I am proposing to declare, I need to pay income tax at the rate of 30% of the undisclosed income. I am also liable to pay surcharge. That surcharge is called Pradhan Mantri Garib Kalyan Cess, which will be 30% plus 30% of 30% plus penalty of 10% of disclosed income. You add up everything, the total incidence will be 49.9% of your undisclosed income. I am required to amount, not the surcharge penalty and the deposit. I may choose every amount. It is required to be paid and deposited tax before filing the declaration. So nothing that I'm making a declaration today, I'll pay tax within such time. First pay the tax, pay your surcharge, pay your penalty, deposit the money in the scheme, come with evidence of all that, and then come and make a declaration. The declaration has to be accompanied by the proof. Now, what is the advantage of declaring over here? Past and disclosed income in the return or electronically with a electronic verification code is required to be made to the jurisdictional principal commissioner or the commissioner. That is the principal commissioner or the commissioner who is exercising jurisdiction over the declarant under section 120 of the Act. And what declaration which is made electronically with digital signature, the jurisdiction lies with the principal commissioner, CIT, CPC, Bangalore. Who should sign the declaration? The declaration is required to be signed by a person who is competent to verify the return of income under section 140. Now, question arises that if I have paid tax, surcharge or penalty, am I entitled to a refund thereof? The answer is section 199K clearly provides that any amount of tax and surcharge paid shall not be refundable. But please note the wordings. It is amount of tax and surcharge paid under 199D or a penalty under 199E. If by mistake I go and pay an extra amount, does this provision mean that I will never be able to get that money back? Instead of 49.9%, now we've been talking of 49.9, 77.25. Somebody wrongly remembers, instead of 49.9, he remembers 77.25. He goes and deposits 77.25. But when he goes to file a declaration, he realizes that it was not 77.25. The reference of 77.25 was in the context of 115BE. Because both were in the same session, I probably understood one for the other. Now, does it mean that the extra paid by this gentleman under a wrong impression is lost because of provisions of 199K? I would believe no. And reasons would be two. Number one is that, as I mentioned, the language is tax and surcharge paid under 199D. Have I paid 77.25 as tax and surcharge under 199D or a penalty under 199E? The answer is no. What qualifies under 199D and E is total of only 49.9. Anything over and above that is not paid under 199D and E. Therefore, it's an extra amount paid which I am entitled to refund. Now, second, where the scheme does not talk of revising a declaration, when we come to the rules, there is a provision for revising a declaration. Therefore, the rules contemplate a situation where I may file a declaration, then I realize that there is an omission or a wrong statement therein. Mind you, the revision has to be on account of any omission or a wrong statement. Omission would mean that the subsequent declaration has to be of a greater amount. I mean, that is what is omission would mean according to me. But it is also a wrong statement. Therefore, something which is declared or something which is exempt income, I have included in the declaration. What is it? It's a wrong statement that this is my undisclosed income. It is not my undisclosed income. That's a wrong statement. Therefore, I have a right to revise it by virtue of the rules. Therefore, this is one reason where I would believe that I would be in a position to claim refund of excess taxes paid, though of course, I mean, one should not make extra payment and then claim a refund. Also, it would be relevant to note that there is a difference between the revision and an application for rectification. When you say I am revising something, what it means is that the original gets erased and the new one which you are revising gets substituted in place thereof. Whereas when you say I am rectifying, what you say is that the mistakes which crept in there, the original remains, but with the insertion or deletion of certain words. I mean, that's the difference between a revision and an application for rectification. A revised return results in a withdrawal of original return and substitution by a revised return. Application for correction does not have any such implication. This is what Allahabad High Court has told us way back in 9 ITR 130 in the case of Gopal Das, Purushottam Das, as well as in the case of Dhampur Sugar Mills, 90 ITR 236. The rules permit revision on account of omission, etc. Now, in the context of 139.5, the courts have held that a revised return can be filed only when the assessee discovers an omission or wrong statement. Now, we will compare the language. The language of a 139.5 and the language of this rule is identical. Therefore, all the decisions of 139.5 rendered in would be binding or would be a useful guide for deciding as to when one can revise a declaration. Now, in the context of VDIS 97, you had an identical provision in Section 70 of the Finance Act of 1997. In the context of cases arising out of VDS 97, the courts have said that amounts paid are refundable, though there was a provision identical worded. In which cases have the court said that? Number one, where the declaration is non-est, that is non-existing, on account of declarant not making the payments required to be made within the stipulated time. In VDS 97, you first made a declaration, and then within a stipulated time, you went and made the tax payment. If you did not make a tax payment within the stipulated time, the declaration was non-est. So if I had made some part payment, but could not make the full payment, and the declaration became non-est, the courts have taken a view that the amount paid is refundable. Also, the second situation where the courts have held it to be refundable is where the payment made under the scheme is in excess of what is required to be made. The two examples which I took. We are told in 199 capital I that undisclosed income which you are declaring now under the Yojana will not be added, will not be included in the total income of the declarant for any assessment year under the Act. So what you are declaring here cannot be once again taxed by the AO. We are also told in 199J that in respect of undisclosed income which you are offering in 199C or any amount of tax and surcharge paid thereon, a declarant shall not be entitled to reopen any assessment or reassessment or to claim any set-off or relief in any appeal, reference or other proceeding in relation to such assessment or reassessment. Now questions arose, what is the effect of this provision? He is saying a declarant shall not be entitled to reopen any assessment or reassessment. How can a declarant be entitled to reopen? What they mean is, similar provision was there in earlier schemes as well. What it means is that if in an earlier year concealment is already detected, you cannot get away by saying that, look here, I concealed, fine, you detected, fine, but now I have offered it under the Yojana. Therefore, don't make an addition over there. You cannot reopen or you cannot make a claim that I want to set off what has already been detected by virtue of a declaration under the Yojana. Right? Now, as a corollary, if penalty proceedings are pending in respect of past concealed income, such proceedings cannot be dropped merely on the ground that he has declared the concealed income under the Yojana or in an appeal, I am not entitled to claim any relief in any appeal on the act. Now, question arises, what happens when an assessment is set aside? See, if assessment is finalized, the AO has detected, then I cannot go and declare it. But what happens if the assessment is set aside? Now can I go and declare it or no? Under the Yojana, the answer would be yes. The answer would be yes. And for this you have an FAQ from under the 1975 scheme of CBDT. One can draw support from that. But the question is, those income should be in the form of or out at the threshold itself. Now, we are told that the declaration is a declarant, which means immune other than the acts mentioned in 199(o). Therefore, if you declare some income under declaration in the Yojana, that declaration can be used as an evidence against you for the purposes of the acts mentioned in 199(o). And the acts mentioned there were the IPC, certain chapters, was Benami Transactions Act, it was PMLA, Prevention of Corruption Act, and you had corporate splitting Act. So for the purposes of those act, declaration will be used against you. Otherwise, no. There has been a press release where the Revenue Secretary has said that the tax department will not ask the source of funds deposited in the bank from November post demonetization of high value if entire income is declared and paid. So from wealth tax, civil and other taxation laws, but there is no immunity under FEMA, PMLA, narcotics and black money law. In view of the above, possibly if any person were to declare on money received on sale of his immovable property in a declaration under PMGKY, the stamp authorities cannot use the declaration against the declarant and demand stamp duty. Similar will be the case if disclosed income is said to be in the nature of sale consideration not received. So if I had sold some immovable property, I have received on money, which on money is held by me in the form of cash or a deposit in a specified bank account, a deposit with a specified entity, and I declare it in a declaration. The stamp authority cannot come and use that declaration against me. If I say I had unrecorded sales in my books, which profit wherefrom or the sale consideration is held by me in cash or in an account which was not disclosed by me, I am now disclosing it. The sales tax authorities or the service tax authorities cannot use that declaration against me. Now, there is 199P, which is captioned removal of doubts. It provides that nothing contained in the scheme shall be construed as conferring any benefit, concession or immunity on any person other than the person making a declaration under the scheme. This is subject to what is expressly stated in 199C. Therefore, a question arises that in a case where a declaration is made by a firm or a company, can immunity not be granted to the partner or a director? Will he be prosecuted on the ground that the immunity applies to the firm? The immunity does not apply to you as a partner or a director of the company. This question arose in the context of IDS 2016, where recently on 14th of July circular, CBDT in response to question number 8 stated that in respect of a declaration made by a company or a firm, immunity will be applicable to the directors or partners as the case may be in respect of undisclosed income declared under IDS by the company or the firm. Also, in circular dated 30th June 2016, in response to question number 8, again in the context of IDS 2016, CBDT clarified that where a declaration relating to investment of undisclosed asset is made, no investigation will be initiated against the seller in respect of the declaration. Now here we'll have a vice versa situation. Why? Because here what I am declaring has to be in the form of a cash or deposit in an account with a specified entity. So I have received cash. I make a declaration that I sold an asset I received on money. Here is that on money. I am declaring it. Will the authorities run against the buyer of the property? The answer to question number 8, which was in a vice versa situation, CBDT had clarified that we are not going to begin an investigation against the other party. Now, according to me, all this will have to be probably reiterated to avoid any uncertainty. CBDT may possibly say that whatever clarifications they issued under IDS, because this is also one more opportunity to come clean and possibly the last opportunity by the authorities, right? Therefore, they should reiterate that all the clarifications given under IDS 16 will hold good for declarations being made under the Yojana as well. Now, this takes me to another question, which a little bit in detail we will deal only if time permits. That supposing there is a cash credit in my books, right? It was a bogus cash credit. Yes, I know that, right? But declaration is made not by me. Why? Because I cannot declare this cash credit. It has to be income in the form of money or in an account, right? So the person, however, the person in whose name that cash credit appears in my books, he goes and declares the money under the Yojana. He has declared under the Yojana whatever undisclosed income it is, right? When it comes to my establishing my cash credit, can I rely on the declaration made by the person who has allegedly given the loan and say that his capacity stands proved by his declaration which he has made under the Yojana. Am I clear on the question? As credit entry amendment 68. This he has can I not declare, I mean, take shelter of this argument? We have a direct Supreme Court decision on this proposition on the exactly, I mean, under a set of provisions where this language was not there. But Supreme Court says that look here, subsequently this language is there in all other schemes. But even though it was not there, Supreme Court said that you cannot take any immunity by virtue of somebody else making a declaration. It was again a case directly on the point. We'll come to that in detail if time permits. I believe I'm running short of time. Okay, now a declaration could be void under certain situations. Void would mean that as if the declaration was never made. What are the situations where the declaration will be treated as void? It will be treated as void if it is made either by misrepresentation or suppression of facts. So either I misrepresent or I suppress certain facts, or I do not pay tax and surcharge under 199D. I do not pay penalty under 199E. I do not deposit the amount under 199F. Once a declaration is declared void, it is deemed never to have been made under the scheme. Now, how will I come to know that the declaration has been void? The question arises, how will I come to know? I mean, somebody has to tell me that, boss, this is void. Why? Because you have misrepresented. If I have not paid tax, surcharge, penalty, deposit, that I can understand. But if it is for misrepresentation or suppression of facts, somebody has to communicate to me. Now, there is no provision in the scheme or in the rules which provides for communicating to me, to the declarant, that the declaration has been treated as a void. However, sub-rule 4 of rule 3 provides that the principal commissioner or the commissioner shall issue a certificate in form number 2. I make a declaration form number 1. In form number 2, he issues me a certificate within 30 days from the end of the month in which valid declaration has been furnished. Within 30 days from the end of the month in which a valid declaration has been furnished. Therefore, I would believe that once a certificate is being received by me, I can be certain that the declaration was valid and that it was not a void declaration. Okay, now we come to the scheme very quickly. The deposit scheme came into force on 17th December and will continue to 31st March. The deposits to be made by me under this scheme shall be held at the credit of the declarant in the bond ledger account maintained with Reserve Bank of India. Deposits are to be made in multiples of 100. The amount of deposit shall not be less than 25% of the undisclosed income declared by the declarant. It should be proposed to be declared by the declarant. Or finally, if you have declared something, this has to be 25% of that. Rule 4.4 states that the entire deposit to be made under 199F1 under this scheme shall be made in a single payment. In a single payment before filing declaration. This rule is likely to create difficulty in cases where declarant desires to revise a declaration as a result of omission and wishes to make a declaration of a higher amount resulting in a further deposit to be made. This is one way of looking at it. The second question which arises is, am I required having filed a declaration, am I required to revise a declaration, or can I not file one more declaration? I do not find anything in the scheme which tells me that you can come up with only one declaration. So can I not have more than one declarations? Possible to take a view? Yes. If at all something comes against me, the two arguments. Number one, it says a single payment. And number two, there is an option of revising a declaration. So fresh declaration, why don't you go and revise your declaration? Okay, the deposit is required to be made in the form of cash, draft, check, or electronic transfer. In the evening, go and file. It has to be after the bond ledger account is effective. Purpose, the effective date will be the date. If I pay cash, of course, on that, but if it is by check, etc., then the date of realization of the check or transfer through a electronic transfer. The application for placing the deposit shall be in form number 2 and shall indicate the amount, name, address, PAN, and the bank account details. If the declarant does not have the PAN, he shall apply for the PAN and provide details of such PAN application along with the acknowledgement number. So you necessarily need to have a PAN. The application shall be accepted by any banking company to whom the Banking Regulation Act applies. The bank receiving the deposit is required to electronically furnish the details of deposit to Revenue Department in the Ministry of Finance by next working day to enable the department to verify the information of deposit before accepting the declaration. So that this will be transmitted to the Revenue Department, Department of Revenue, Ministry of Finance. They are going to verify so that when I make a declaration, they will see whether this check has been realized or not. The Reserve Bank and authorized banks shall maintain confidentiality of the data received. Now, nomination facility is available to a sole holder or a sole surviving holder of a bond ledger account. So if you have joint holders, there will be no nomination facility available. Nomination facility will be available only to a sole holder or a sole surviving holder of a bond ledger account. An individual may nominate one or more persons who shall be entitled to the bond ledger account and payment thereof in the event of his death. So it is only the individual bondholder who will be entitled to nominate. How many people does he nominate? He can nominate one or more persons. Where there are two or more nominees and either of them dies before such payment is due, the title to the bond ledger account shall vest in the surviving nominee, and the amount being due thereon shall be paid accordingly. Now understand, if I have nominated my two children and one of them dies, then logically what I would have thought is that the heirs of the second nominee should get the 50% share. Well, if I have two children and I have nominated that 50% goes to one child, 50% goes to another child, if for any reason one of the children dies, then I would have thought that his heirs would have got the money, but there is an express provision that it's not going to be so. Whoever is the sole surviving nominee will get the entire proceeds. Now, where a nominee predeceases the bondholder, then they are saying that you should come and make a fresh nomination. If you want, you can always come and change your nomination whenever you want it, right? Now, the bonds are not tradable, they are not transferable. Can they be mortgaged? I would believe No, there is no bar there, but there is a bar on transfer. Mortgage is also a form of transfer under Transfer of Property Act. Therefore, I would believe, okay, I would believe that the bonds are not, cannot be mortgaged. They are interest-free bonds. They will not carry any rate of interest. The amount shall be paid on the expiry of 4 years from the date of the deposit. The amount shall be paid on expiry of 4 years from the date of deposit, and before redemption, before maturity, redemption shall not be allowed. For nominating a person, what is required is the name of the nominee along with the expanded initials. So no initials, the expansion of the initials required, address of the nominee, relationship of the nominee with the bond ledger account holder, the particulars of the bank account of the nominee, in case the nominee is a minor, date of birth, and also name of the person authorized to receive the amount for the time being in the event of death of the bondholder during minority of the nominee. Right? Now, this was about the scheme. Now we come to certain issues which arise. There has been an amendment in Rule 114B and 114E. Now, what are these rules? 114B provides that when an assessee, when you go and deposit money in your bank account above 49,000 rupees, 50,000 and above, you are required to mention your PAN number. Now the rule says that from 8th of November to 30th, for each deposit over 49,000, you are required to give your PAN. Also, if the aggregate deposits exceed 2,50,000, then also you are required to give your PAN. So to illustrate, I deposit 49,000 rupees each transaction, and I do this 10 times. The total is going to become 4,90,000. The minute total exceeds 2,50,000 in all deposits thereafter, after the total has exceeded 2,50,000, I am required to mention the PAN. Rule 114E deals with the banking company and the post office filing what we call it as an AIR. There is a new requirement that if there is any deposit about 2,50,000, a deposit about 12,50,000 in a current account and a deposit of 2,50,000 and above in any other account other than current account, in an account other than a current account, then such deposits shall be reported in AIR to be filed by 31st of January. So department is gearing up that by 31st January they should have data about all deposits exceeding 12.5 lakhs during the period from 8th November to 30th of December in current account. And in respect of other accounts, which would include your recurring account, your saving account, your fixed deposit account, if deposits are 2,50,000 and above, again they will get reported. All this will happen by 31st of January. Now the question comes that we have been listening that this is the reporting requirement. So does this mean that up to 2,50,000 there will be no question asked? Does this mean that up to 2,50,000 no question will be asked? I would believe no. There is no blanket tax-free exemption provided. If the person is not an assessee and he deposits up to 2,50,000 rupees, the matter will not get reported. And because he is not an assessee, possibly, no questions will be asked. But if you are an assessee and you have deposited even 2 lakh of rupees, see, there are many people who file a return of income with income of 1,50,000. Why? Because they want to claim refund of some TDS because their income is below the maximum amount not chargeable to tax. Now, if this person has even deposited 2 lakh of rupees, will it get reported? Answer is no. This will not get reported. But per se, for any reason, the case gets picked up for scrutiny. Can the AO ask him the source of this 2 lakh of rupees? The answer would be undoubtedly yes. Can he contend that my amount which I have deposited is less than 2,50,000 rupees? It's just 2 lakh of rupees. Therefore, I'm not going to, this amount is not liable to tax. I'm not required to explain the source thereof. The answer is no. If at all he cannot satisfactorily explain, what will be the consequence? The consequence will be that this will get taxed as income under the specified sections, liable for taxation plus surcharge plus S at 77.25, and because he would not have declared it, 6% extra penalty under 271 AAC, therefore it will attract an incidence of 83.25%. I would believe there should be some clarification to the field officers on some threshold, whatever the government decides, whatever the CBDT decides. But otherwise, this could possibly be a tool where unnecessary questions may be put to small SSEs. Now, if a person has 4 bank accounts and deposits 2,50,000 in each of the 4 bank accounts, will it get reported? The answer is possibly no. Why? Because each bank will report based on the PAN, and for each bank the amount is going to be less than 2,50,000. But we have been hearing reports in the media that they are ultimately going to collect it. One should not be surprised if there is any amendment in the form of return of income as well, asking you yourself to declare how much amount have you deposited. There, of course, you will be bound to report that I have deposited, 9,90,000 or whatever it is in 4 bank accounts. You may not say 4 bank accounts, but you will still report that figure that will not match with the AIR information, mind you. You will say I have deposited, the AIR information will not throw up that data. So there will be a mismatch which could possibly result in a case being picked up for scrutiny by the computer. Now, if I have declared amount in IDS, but I have deposited it after 8th of November in demonetized notes, will I be questioned? Obviously not. But if I have deposited them in the new notes, will I be questioned? The answer is yes. I will be told that when you made a declaration, you did not have the new notes, right? You had notes which have since been demonetized, or you could be saying that I kept 100 rupee notes or whatever that you want to say. But it is that currency which should have come into your bank account. It cannot be the new currency which can get into your bank account. Now, can a declaration be made by an SSE in whose case the scrutiny assessment is pending? Undoubtedly, yes. Can it be? Will the answer be different if the AO has detected undisclosed income and is proposing to make an addition and also levy a heavy penalty? The scrutiny proceedings are on, A by 1415, right? The AO has detected something. I do sense that the AO has detected, he has issued me show cause. But the scrutiny is not over as yet. It's getting time barred on 31st December. Tomorrow morning, can I go and pay tax, interest, penalty, deposit, and declare that amount before the AO were to complete the assessment? I would believe, yes, it is possible. The only condition being income, undisclosed income, should be held in the form of cash or deposit in an account with a specified entity. Don't forget that, right? Now, am I eligible to declare if I have received a notice under 142, 143.2, 158, 153A, 153C served on me? The answer is yes. Is there a bar on a person surveyed or searched from making a declaration under PMGKY? The answer is no, as long as it satisfies the criteria. Can cash credits appearing in the books be declared? We discussed this, that income has to be in the form of cash or deposited in an account. Are multiple declarations by the person allowed, either in different capacity or in same capacity? In different capacity, undoubtedly, yes. I can definitely make a declaration in my name. I can also sign a declaration in my capacity as a Karta of the HUF, or as a partner of so and so, or as a legal heir of so and so. right? So in different capacity, undoubtedly yes. In same capacity, debatable whether yes or no. Now we've been making a reference to the circulars issued under IDS 16. Will those circulars apply to PMGKY? I said it is certainly better if they were to clarify the position, but presuming they do not clarify the position, then what is my legal right? Or what does principles of interpretation tell me? Now, we find that at many places PMGKY could be a reproduction of VDS or 97 or IDS 2016 with a few changes. The CBDT has issued various circulars, which also we know clarifying various provisions of the earlier schemes. Now, question which arises is whether clarifications are not issued for this scheme, and if the provisions of present scheme are silent on any of the aspects dealt with by the earlier circulars, whether clarifications given under earlier schemes would apply mutatis mutandis to the present scheme. Similarly, whether the court judgments delivered in the context of earlier schemes will apply to PMGKY. The answer would be that if you go to the decision of the House of Lords in Barras versus Aberdeenstein, they said if an act of parliament uses the same language which was used in a former act of parliament referring to the same subject and passed with the same purpose, right? Your subject is the same, undisclosed money. The purpose is the same, unearthing black money. And for the same object, and the same and well-known rule of construction is to assume that legislature, when using well-known words upon which there have been well-known decisions, uses these words in the sense in which decisions have attached to them, right? So legislature is presumed to be aware. Therefore, what can we say? Therefore, what we can say is that, however, this judgment was dealing with interpretation given by the court in respect of identical provisions of the statute, but where provisions are different. But CBDT has clarified things. Those clarifications can be broadly two. One, they are interpreting a language of the provision. And the other could be where they are deviating from the language and are providing a benefit to the assessee, which certainly they can, right? There's nothing in the language, but CBDT in a circular, in its wisdom, deviates from the language and provides a benefit to the assessee. Now, the first category of circulars, which are clarifying the correct interpretation of the language, will be binding. But to say that the benevolent circulars of the earlier scheme will apply to this scheme also is a bit difficult, or a bit far-fetched. Therefore, I suggested that possibly CBDT can come out with one circular saying that those benevolent circulars would apply to the Yojana as well. The chamber, if it is representing, may consider this as a point for representation. Right? Therefore, possible that benevolent circulars may not apply to this scheme. Now, the next question is, many times people come and ask tax consultants as in whose hands should the income be declared. So do you really have an option? Should I declare it in the hands of the husband or the wife or the child? Should this be individual declaration or should this be the declaration of an HUF? Do you really have, an option here? According to me, the answer is no. Strictly speaking, there is no choice for choosing in whose hands the income is to be declared. It has to be declared as the income of the person who has earned it, in whose hands the income was chargeable. Now, where do I get support from what I'm saying? In the context of 1975 scheme, VDS scheme, a question arose for CBDT. Disclosure may be made by minors and ladies or by HUF with no nucleus funds of their own. Will any inquiry be made as to real person whose income has been declared by one or more of the following in these categories? So the answer given by CBDT was, when minors, ladies and HUF are competent to make declaration on their own account, they cannot make declaration to help another person. This is evident from item C of the verification to declaration, forms A, B and C, wherein the declarant has to solemnly declare that income or wealth in respect of which he is not chargeable to tax is not included in his declaration. Now I verified somehow the present form does not have this language. Okay, I'm not suggesting anything, but then since this reply made a reference to the form and the verification in the form, I checked it. The present form does not have anything like that in the verification. Okay, then it says section 17 of the ordinance makes it clear that any benefit, concession or immunity will be available only to the declarant. Correct. I mean, that is there in the present scheme as well. A declaration made by the minor, lady or HUF will not be starting point for making inquiries. However, subsequently, on evidence available, if it is found that the income or wealth in fact belongs to a person other than the declarant, it will be open to the ITO to assess the former and take further proceedings against him in accordance with law. Right? Section 199 capital I of the present Yojana provides that the amount of undisclosed income declared under 199 C1 shall not be included in total income of the declarant. Therefore, what is contemplated is what is otherwise includable in the total income of the declarant. What can be includable in my total income is only my income. Therefore, there is a mention or an indication in the scheme that a person is required to declare only his own income and not income in respect of which he is not chargeable to tax. 199L provides that nothing contained in the declaration under 199 shall be admissible in evidence against the declarant for the purpose of any proceeding under the Act other than the acts mentioned in 199. Oh, we have one or two more issues to add in. If now a question arises that under the Yojana, I am not required to explain the nature and source of the income. Okay, I just say I am declaring 1 crore. Now, if at a subsequent date something is found by the authorities, can the authorities give me immunity, or can I contend that it is that very same income which got reflected in a declaration in Yojana, or is it difficult? Am I clear on the question? I declare 1 crore of rupees without mentioning what it is. Later on, in the course of search on somebody else, it is found that I have paid some cash money to buy a property. Right? I purchased diamonds, I purchased something, which is established, there's no doubt on that. Papers were found in the course of search on somebody else. Now I am told that, look here is evidence that you have purchased something by paying cash. Can I say that yes, cash I did pay, but set it off against the amount declared in the Yojana? It appears to be, sorry? Okay, if I am a seller, then in spite of the fact that the source is not mentioned, even then it is possible. I have my doubts. The reasons are, you have not paid for the diamonds. So if nature and source is not disclosed under the Yojana, what would be the consequences? In short, the question. Now, I am saying the Yojana does not require me to declare the nature and source of the income which is being declared. So consider that I have earned income in earlier year by under invoicing the sales. I have been in the habit of under invoicing my sales, right? I am a shopkeeper. For certain sales, I was not preparing invoices. The declarant declares the amounts under PMGKY without disclosing the nature of income being declared. Subsequently, in the regular assessment proceedings, the AO established that the assessee had under invoiced the sales. Question is whether the assessee will be able to plead that undisclosed income declared in a declaration pertains to such under invoiced sales, and since it is undeclared, since it is now declared, income cannot again be included. Can I take up that plea or no? Now, it appears that in the absence of any disclosure of the nature and source in the declaration, it would be difficult to prove that undisclosed income is in respect of the same income that the AO has independently detected. The difficulty would be more if the amount detected is different from the amount declared, right? So it's going to be slightly difficult. Now, in the context of 1975 scheme, Guwahati High Court in Assam Court storage case held that it was necessary for the SSE. It is necessary for the SSE to connect his voluntarily disclosed income for a particular assessment year with the amount of additions made by the AO in respect of concealed transactions in another assessment year. It further held that in the absence of any evidence establishing the connecting link, the additions made by the AO cannot be deleted. So please be very, very clear. Now, what is the answer to this? It's very easy to say. Guwahati High Court, you cannot get. But what is the way out? The way out is you declare your nature and source. If you are declaring everything, then everything will match. But if you have undisclosed income of X amount and you want to declare something less than X, then such discrepancies are bound to happen. Also, if you go through the form, you find that even the assessment year is not required. If you go through the form of the declaration, even assessment year is not required in the form. So it's really a question mark as to whether, how do I communicate? I would feel the best way would be to write a letter, if at all you want to declare, that this is the assessment year for which I have declared it, this is the nature of the income, and this is the source of income. But that you can do it. I mean, of course, you may say, okay, how do I do it in an electronically filed return? You can always write a letter. Nothing stops you from writing a letter to the principal commissioner or the commissioner and intimating him. Now, therefore, I would feel it is advisable to consider whether it is possible to declare the nature and source of the amount declared or not. Now, lastly, we deal with that Supreme Court decision about the declaration of somebody else being relied on by the person in whose books the cash credit appears. The Supreme Court in Jamnadas Prasad Kanhaiya 130 ITR was dealing with a case under VDS 1965. At the outset, please note that 1965 scheme, there was no provision similar to our 199P, which says that a person other than the declarant cannot take immunity. The facts of the case before the Supreme Court were that SSE partnership firm credited certain amounts in its books in the name of 5 minors. The SSE contended that these minors have declared amounts as their income in VDA 65 and thus tried to explain the source. So in my books, there was a credit of 5 minors. I was asked, prove it. I said these minors have declared the income in VDA 65. Therefore, this is the source. The AO required the SSE to produce evidence to support that these minors had a source of income, the income from which could have been made available for disclosure. The SSE said you prove that these minors had income, which income could have been disclosed by the minors in a declaration made. On failure to prove the source and genuineness, AO taxed the cash credits as income in the hands of the firm. The matter traveled to the Supreme Court. The question before the Supreme Court, as framed by the Supreme Court itself, was like this. The Supreme Court said the main question in controversy lies within a narrow compass. The question, in fact, is whether the provisions of Section 24 of the Act can be construed as conferring any benefit, concession, or immunity on any person other than the person making a declaration under the Act. So there was no such provision there which said that nobody else can take a immunity. But in spite of that, Supreme Court said that what is the question? The question is, can anybody else take immunity in respect of a declaration made by somebody else? They said it may also be mentioned to avoid any room for doubt that legislature has introduced Section 18 in VDS 76. So in VDS 65, by deciding a case under VDS 65, they are making a reference to VDS 75, which specifically provided, and the language is similar to what is there in the Yojana, which specifically provided that save as otherwise provided in the Act, nothing contained in the Act shall be construed as conferring any benefit, concession, or immunity on any person other than the person making a declaration under the provisions of the Act. This is exactly the language in section of the Yojana as well. The question for consideration is whether absence of such a provision as is found in 1976 Act leads to consequences that acceptance of a declaration under Section 24 confers a benefit which is not provided by the Act on a person other than a declarant, and takes away the power of ITO under Section 68 to make an investigation as to nature and source of a cash credit appearing in the books of the SSE, to reject the explanation offered by the SSE as unsatisfactory, and to treat it as income from undisclosed sources. This was the question framed by the Supreme Court. Then Supreme Court discusses the contentions of both the parties, and then it observes the scheme of the Act makes it abundantly clear that it was to protect only those who preferred to disclose the income they themselves had earned in the past. And which they had failed to disclose at the appropriate time. It is undoubtedly true that the Act was brought on the statute book to unearth unaccounted money. But there is no warrant for the proposition that by enacting the same, the legislature intended to permit, to connive at, any fraud sought to be committed by making Benami declarations. If the contentions were to be accepted, it would follow that an assessee in the higher income group could, with immunity, find out a few near relatives who would oblige him by filing returns under Section 24 of the Act, disclosing unaccounted income of the assessee as their own, and claiming that the said income was kept by them in a deposit with the assessee. Look at the observations of Supreme Court way back, dealing with a case under VDS 65. Then in a subsequent paragraph, the Supreme Court says, the immunity under 24 was conferred on the declarant only, and there was nothing to preclude an investigation into true nature and source of the credits. The ITO was therefore justified in treating cash credits in the books of the assessee in the name of creditors as unexplained. Therefore, the conclusion would be, if the creditors of an assessee cannot prove that they are capable of having an independent source of income, the assessee could be taxed under Section 68 in respect of cash credits, even though the creditors have declared the corresponding income under the Yojana. This, I finished what I had to share. If there are any questions, I'll be happy to answer. Thank you. If you declare it under the I would believe it to serve. Because income of any assessment, yes, income of any assessment here. Yeah. But if the that has to be declared. That is what his question is. Okay, can he declare that in the Yojana or not? Repeat the question. Okay, fine. The question here is that there have been clarifications in the media that in respect of demonetized notes which are declared under the Yojana, no questions will be asked. So the question is that whatever is the bank balance as on 8th of November, which is undisclosed, can I declare that under the Yojana or no? Answer is yes. Will any questions be asked? Answer would be no. If at all it has a balance on that date. To the extent I would feel if it has, I mean, if money has been I would feel the deposits. If every deposit is undisclosed, whatever went into that bank is undisclosed, so then it will have to be all the receipts, no? Because not peak. The credits, total of credits, no debits cannot be subtracted because no deduction for expenditure, etc. Sorry? You will have to declare the total amount. Sorry? Correct. So, is contained. Okay, fine. The question is that income held in the form of. Correct. Now question will be, sir, the scheme is open from 17th of December till 31st of March. Held on which date? 8th November, 17th December, 31st March. Sorry? Balance on which date, sir? As on which date? So if you come to this, if you take this argument, then the question will be as on which date? Do I take 8th November? Do I take 17th December? Somebody making a declaration on 31st March? Can he withdraw the account and declare only on the balance? So therefore, I have said I would feel undeclared income, which is total. So, so to the extent you can establish that it is the same, I would feel peak theory would apply to that expenditure. No, withdrawal and deposit maybe. Yeah. Possible for somebody to argue. Nothing stops him. Human probability theory would support the case of the AO. Possible. Possible. So carry forward. Cash is not carried forward. That can happen. There are decisions. There are decisions. This is certainly not a loss. There are decisions under the old demonetization times where question was that somebody said okay, you could not have held so much of high value currency. Now we are saying opposite of that. In the cases, the courts have taken a view that there is no law which prohibits you from holding a particular denomination currency. There is no business practice which requires you to maintain what currency notes you are holding. Therefore, there is no reason to disbelieve what the SSC is saying. Now, in your case, what you are saying is I had 1 crore of rupees in 100 rupee notes as cash balance in 100 rupee notes. Difficult to hold, but not impossible to hold. Uh, 271 double AB, same. This is there in triple A also. It's there in triple A also. Everything is same. You are only. See, as long as the department doesn't prove otherwise, you may say whatever you want. But I was dealing with a situation where the department, in the course of search on somebody, comes up with an evidence. It's not held as a deposit. It is. Maybe they don't do that. Yeah, yeah, yeah. How do you? Uh,
Friends, you will all agree that Jagdish Bhai has given a masterly analysis of the demonetization scheme with excellent presentation, and we all will benefit and take advantage of all the points which he has said. I would request you to carry out with a loud applause. Thank you. Thank you. Thank you for joining us.